72 hours after Britain's decision to leave the European Union, markets are still struggling to come to terms with what promises to be a messy and a long, drawn-out divorce. Now, after Friday's sell-off, all the major indices across Europe are trading with some sharp cuts as we speak. Investors have been clearly caught off guard by the Brexit, and there is no respite for the pound sterling either. The currency continues to trade at its weakest level in more than 3 decades against the dollar. And for the first time in its history, the British 10-year yield has dropped below 1%. So here's a quick check of the top developments of the day on Brexit. Number one, Britain is not in any tearing hurry to leave the European Union. In fact, speaking before the Parliament, Prime Minister David Cameron has said that Article 50 will not be triggered immediately. Now, remember, Article 50, in a sense, is the start of the process of disassociation. Number two, there are reports that the British Parliament will launch a fight back against the vote. Many believe that majority in the House of Commons oppose the Brexit, and they will not roll over and give up. Scotland has already hinted that they're ready to dump Britain for an EU membership. So domestic politics at play. Number three, opposition leader Jeremy Corbyn is under immense pressure to step down as well. 20 shadow cabinet members have resigned. He will face a no-confidence motion within the Labour Party tomorrow. And finally, a survey by the Institute of Directors warns of dire consequences. Among 1,000 business leaders polled, 20% are considering moving some operations out of the United Kingdom. This could perhaps be the reality.
British government will not be triggering Article 50 at this stage. Before we do that, we need to determine the kind of relationship we want with the EU. And that is rightly something for the next Prime Minister and their Cabinet to decide. I've also made this point to the Presidents of the European Council and the European Commission, and I'll make this clear again at the European Council tomorrow. Mr. Speaker, this is our sovereign decision, and it will be for Britain and Britain alone to take. Tomorrow is also an opportunity to make this point. Britain is leaving the European Union, but we must not turn our back on Europe or on the rest of the world.
Well, that is the UK Prime Minister David Cameron speaking in Parliament, reiterating essentially what he's been saying over the weekend. Remember, there is a crucial European Council meeting tomorrow where Cameron will discuss the process of exiting the EU with his European counterparts. Joining us now to talk about the rout that we're seeing in the global markets, especially bank stocks, is Jegarajah joins us from our studios in London. Sri, the banks are getting absolutely pounded.
Absolutely. The banks were really in the sharp end of the selling right now. And it really comes down to uncertainty. Uncertainty about the growth prospects, not only in this country, in the UK, but broader Europe as well. And uncertainty over the exit process, over the roadmap and this transition. And let's face it, as Mr. Cameron pointed out, Article 50 has not been triggered yet. That's something of a poison chalice that he's going to be handing over to his successor. And the problem here is that you can't start the negotiations between Europe and the UK if there's no leadership. And let's not forget that Mr. Cameron is a lame duck Prime Minister right now. So we need the leadership in place in the ruling Conservative Party. So that's what the markets are really trying to come to terms with, and they are still struggling. Yes, we got a degree of composure returning to UK equities after Chancellor George Osborne broke his silence, and he did warn of more volatility to come in the markets, but he did say contingency plans were in place, and also the UK economy fundamentally was on a fairly sound footing. So the market's taking that reassurance at face value, moderate losses compared to what we saw in the latter stage of last week. The FTSE down by more than 2%, but you're quite right. The European banks, the British banks are in a very bad place right now, trading near the Eurozone crisis lows. The European banking index down more than 5% at one point, and the sector as a whole, and let me throw this statistic at you, has lost more than a third of its value so far this year. So that's the worst year-to-date showing for the European banks since 2008. So as you would imagine, this process still has some way to work out. is going to be a long and a tortuous one once Article 50 is triggered. So investors at this point simply are not taking any chances, and they are moving into the safe havens, into the Japanese yen, into the Swiss franc and into gold. And coming from Asia, the transmission mechanism into other markets is really going to be through the currencies. The authorities in Tokyo are very much in currency intervention watch right now. A lot of currency analysts are saying that dollar yen drop below 100 is really the threshold, is really the line in the sand that will trigger intervention. But it really depends on whether the move in terms of yen appreciation is a disorderly, is a violent one. So the EU leaders right now are in transition talks in Brussels. You've heard Prime Minister Cameron speaking, the opposition leader Jeremy Corbyn is speaking, and over the past couple of days it's been absolutely extraordinary. We have seen establishment politics, to put it lightly, in something of a shambles. The Conservative Party in disarray, the Labour Party in disarray as well, and one can argue that the only person with a semblance of a plan, the only adult in the room right now, is the Scottish First Minister Nicola Sturgeon and Bank of England Governor Mark Carney. So it's really going to come down to the headlines, and there's a lot of headline risk still in these markets, given the politics and given all the uncertainty over the transition and the exit and how exactly that's all going to play out. Back to you now.
Sri Jegarajah, appreciate you joining us there from London. As Sri was pointing out, headline risk certainly playing down the market. And you can see it's a sea of red across Europe now. In fact, the market's losing even further. The FTSE in London is now down about 3%. And across the Atlantic, Wall Street is seeing sharp cuts. In fact, the markets look set for their worst two-day decline in nearly a year. Bank stocks like Europe on Wall Street also under pressure as fears over a credit slowdown spook investors. So that's the Dow now, down almost 260 points. The Nasdaq has lost about 2.3%, and the S&P 500 is also down by about 2%. So it's not looking good. This doesn't bode well for our markets when we open for trade, even though we have been resilient. But we'll talk a bit about that as we go along.